What's going on, guys and gals? This is yours truly, Coach MJ Worthmore from LCA University and SuperSimpleForex.com, where we teach Forex traders how to legally rob the banks because that's where all the money is. So I want to break down this gold trade idea for you that I'm currently in right now. The gold trade is currently about 150, maybe 160 pips in profit based off my entry. But I want to show you the breakdown for this trade idea. And the trade could go our way. It could go against us. It could pull back, whatever the case is. I'm going to break down why I took the trade, the places that I'm targeting, the fundamental drivers that help me to determine whether or not I wanted to enter this trade or not, and ultimately some of the things that I'm going to do to manage my trade. And I hope that it just adds value to your life. If you do find this video valuable, and if you learn something, do me a favor, smash the like button, subscribe to this channel, and comment. Let me know what your thoughts are. Let me know if I can help you in any way, and even drop some video requests for me so that I can just keep producing more and more content for you as time goes on. Let's dive into these charts. All right, so now we're here on the charts. We are looking at gold, XAU USD. All right, now I'm in gold at 1930. I had a sell limit order set there. My stop loss at 1940. I'm gonna tighten it up to be just above the high of this particular day. We're looking at gold on I was looking at the 3-hour time frame, but this is the 4-hour time frame right here. Okay, so I want to break down a couple reasons why I took this gold trade today. Why I decided to shoot the shot. Ultimately, let's go ahead and do this. I'm going to take off. Matter of fact, no, I'm gonna leave everything on because I want you to be able to start seeing exactly how I'm recognizing where sponsorship has come into the market and ultimately how you can you train your eyes, right? So here, I'm looking at this particular trading week. So if I draw one more vertical line of delineation, right? So look and we'll see this is what gold did for this particular trading week, okay? We saw that price push down underneath the Sunday opening. Price pushed up, giving us the high of the week on Thursday, and it gave us the high of the week on a Thursday inside of the London session, and the price dropped off really aggressively. So I saw this as a kill zone manipulation move. Price dropped off and then just dropped and dropped and dropped and dropped and dropped, and ultimately it found its bottom down here, okay? This is that price point of, let me see exactly what that price point was. Found this price point of 1804 and 69 cents because we round up, 685, we round up to 69 cents, okay? So I saw this as the top of the move here to the bottom of the move here, right? So ultimately, I just found my trading range. Y'all know that I'm a big fan of finding trading ranges and then shooting my shot inside of those ranges. So once we established the trading range, I just anchored my Fibonacci, okay? Now, if we look at this here, we see that we are definitely in a heavy premium area, right? So we're well above the 50% mark, definitely in a heavy premium area. So now we just have to evaluate why we took the trade today versus any other time, right? So looking at this here, we saw that in this particular trading week, that's what these vertical lines here delineate. I learned that word delineate from one of my mentors, ICT. Basically, what it's showcasing, right? These vertical lines here are showcasing the trading week, all right? So this is the trading week that we're currently in right now, with this week beginning Sunday, March 12th, and it will end it'll end Saturday officially, and the market will open up again Sunday the 19th. But yeah, so here we go. So this week right here, we saw that price pushed up above the Sunday open. Now, I got this as Creflo because one of my boys, shout outs to my boy Mishan Airborne, he says church is open on Sundays, and the Sunday open is, it's one of his major price points that he trades away from and trades back to. And Creflo Dollar is a famous pastor here in Atlanta, Georgia, where I live. And yeah, Sunday open, church is open on Sunday, like Creflo. That's the joke. So anyway, so we're well above the Sunday open for this particular week and for the week previous and the week before that. So I'm a big fan of selling above the Sunday opens, and I'm a big fan of buying below the Sunday opens, right? So this particular trading week here, we see what we got. We see that price pushed up, came deep into our premium area, okay? And then if we come down to the 1-hour time frame, I'm going to do that, and I'm going to put on my day separated because there's something very specific that I want you guys and gals to see that I recognize, okay? So I put on my session breaks right there, right? Now, these session breaks, this separates each trading day for us. So we know that this particular day is Monday, this is Tuesday, this is Wednesday, this is Thursday, and then we'll have Friday show up right here. Where's Friday going to start? This is going to be the Friday midnight price right here, right? So that's ultimately the trading day. So I'd like to catch sales off of the high of the day and or the high of the week, especially if it's going back towards a Sunday opening price, and especially if I think that long term we're seeing a trend and we're looking for break of structure. So I'm ultimately looking for this gold move to break structure, right? Remember, we have our low here at 1804 and 69 cents, okay? And I'm going to go ahead and add on my 27 extension. Okay, I'm gonna make that blue, and as you see, this gives us our price right here. Okay, and I think that is like 1762 or something like that. Yeah, 1762 and a quarter, realistically. So that would be the target that I would target for gold, which ultimately, if we caught this move, we caught the tiger by the tail, if you will, this is going to be a 1 to 16.77 risk reward ratio profile. Ultimately looking at what's currently a 100 pip stop loss for a 1,677 pip take profit. Now, of course, when I tighten my stop, once we get the break of structure underneath this low and this low right here, once we get that break of structure, then I'm going to lock in my stop loss right there to increase my RR for 1 to 22.7, and I'll find my partials along the way, okay? But why did I take this trade? Well, let's look at what happened here. So we look at how the week opened up. We're well above the Sunday open, so that automatically gave me an idea that I wanted to become a seller, okay? Now, here's something interesting that happened on Wednesday. Wednesday, price gave us an order block, and then price pressed up during the London session, pushing up, and I like to always see London give the manipulation move, where basically it induces traders into thinking that price is going one way because the moves are very parabolic, they're impulsive, whatever.
And then I like to see the high or the low get set and then either respect it or swept and then give a bullish engulfing or a bearish engulfing candle, depending on what direction we're looking to take the market in. Okay. Now here we see that price pushed up. We know that we're well inside of our premium area for sells. Okay. And we see a price gave us the high of the day right after the London New York overlap ended. Okay, so it gave us a high day at 12 o'clock. The London New York overlap ends at 11:30 a.m. Eastern Standard Time. So if you're not on Eastern Standard Time, just adjust for your time based on where you are in the world. But the London New York overlap ends at 11:30 Eastern Standard Time. So this is a half an hour outside of the London New York overlap. So basically all of the massive amounts of volume was leaving the market. But here at 12 o'clock, that 12 o'clock candle, that's when the high of the day and the high of the week was set. Now y'all saw me playing with this diagonal line here. And it's because I saw that price diverged here, right? So if I go ahead and throw my indicators on and I put on my divergence, right? You see here that it went into this overbought section right here. These highs look relatively equal on the H1 time frame, but you see that there's a slant right there. Now, if we come into the M15 time frame, the divergence is a bit easier to see. Okay, we look right here. We see right here, this is that divergence. All right, so we got that divergence with the high of the day being set right outside of the London New York overlap, which is a kill zone for me. And then, of course, right here, there's that divergence. We can see that clear as day where price was pushing up, but momentum was beginning to wane and move to the downside. So I said to myself, I want to see if the high of the day that was set on Wednesday, I want to see if the high of the day gets respected. Okay. Now, what I also did is I marked off this order block right here, right? So this was that last up candle before the down move. This is our inside bar right here. And I believe that inside bar is the one that got mitigated. The inside bar, this is actually, let's go ahead and include that way. The inside bar is the first down candle before the down move, which confirmed this candle as our area of supply. Okay. So we see right there, we got picture perfect mitigation of this inside bar when price came back in New York today and wicked in, right? It wicked in, pulled away, came back, and it gave us that bearish engulfing candle on the N15, and that was where I actually called the signal for my traders. But I actually got in at 1930 because I felt like 1930 was going to be a good whole number to get in on. I had my stop loss at 1940, and 1940 lined up with a Fibonacci level, and I actually tend to use my Fibonacci levels as areas for stop losses and take profits and support and resistance and all that good stuff. So that's the reason why I got in. So I got in, it wicked me in to, this morning at 9:15. So well, actually probably wicked me in a little sooner than that. Yeah, it wicked me in, and I suffered a little bit of drawdown, but then once I saw this bearish engulfing candle here, forgive me. Once I saw this bearish engulfing candle here, I was like, all right, cool, we should be good to go, right? Now, that is the reason why I took the trade. And if we see that, now we see this double top M formation. And ultimately, what we want to see is structure continue to break down. Okay, so I want to see this low right here at 1907 and 56 cents. I want to see this low get broken. I want to see price trade down, break that low, close below it, maybe give us a small pullback, retest the fib level, something like that, and then break and close below it a second time. Once I get the first close, I'll tighten my stop by 30 pips. Then when I see the pullback, if I see the second close and it breaks down and closes below again, then I'll move my stop loss in the break even or maybe very, very small profit because I'm just going to look for structure continue to play out right there. Okay. Now for my intraday target, if I'm looking for this trade to complete where I take big partial or take the entire position off, I'm looking for price to come back to the Sunday opening price for this week, which is 1867. I'm going to put that on 1867 and 4 cents. Okay, so we round it up again. So that would ultimately give us a 1 to 8.5 risk to reward ratio profile where we had, ultimately 100 pip stop loss that we turned into a 73 pip stop loss for a 630 pip TP, right? 1 to 8.5 RR. Like you can't not make money if you always take 1 to 7s, 1 to 8s and let those things ride out, before taking partials. Like I don't take big partials unless I'm at like 1 to 4, 1 to 5 RR. But knowing how price likes to trade back to the Sunday opening price, since this is this week's Sunday open, if I see price moving really aggressively towards it, I'm just going to lock my stop loss in the break even, let this thing do what it's going to do, and just make that 8.5% account growth because I did put a 1% risk on this. Okay. Now if it comes down to this second Sunday open right there, well, that's a 1 to 10. Okay. 1 to 10 RR trade. And then ultimately I'll probably get out there and then it'll just scale in another position, right? Coming down here to this Sunday opening price, that right there is, what is that? That's a 1 to 16 RR. And again, we're just looking for this break of structure down to the 27 extension, which also conveniently enough lines up with an unmitigated area of demand on the daily time frame. I've got these marked up already. So let me go ahead and just take this off. Okay. This is the 12-hour shipment to hit the daily. There we go. Okay, so we've got these unmitigated areas of demand. We got these down candles before the up move. We see how this one right here, we got the confirmation where, price confirmed this demand zone and we've got no mitigation on that. So trading back to this candle is really, really ideal for us as traders because it's an unmitigated area of demand. That's open position liquidity, like I like to teach my students. And ultimately, if this thing falls our way, if it were to go all the way down, that's a 1 to 22.5 RR trade. I mean, I'll be honest, I'm going to take partials along the way. I'm going to take positions off, put it back on, stuff like that. But for those who've got the patience and the mental dexterity, that's a word that I learned in high school. For those that have that, to just hold that, I mean, that's a trade where you can take a 1% risk and have a 22.5% account growth, or a 2% risk if you're like one of those IML traders that swears every trade they take is 2%, which is cap. But anyway, yeah, I said it on YouTube. Come for me, come at me, bro. If you did 2% on this and it went for 22.5%, and you also have like a 45% account growth, and that's just the style of trading that I teach, where you want to see that you've got big reward against small risk, but you've got to have all of your reasons for taking the position in the first place. Now, what I also want to show you is why I fundamentally decided to take this position, right? Because we need to see if gold's going to come down, we need to see a strong dollar. So let's see if we got some reasons for a strong dollar on Forex Factory real quick. So you see here, we're on Forex Factor right now. So it's today, March 16th. And let's look at our fundamental drivers. So we see here that the unemployment claims came out significantly lower than forecast and lower than the previous week. So whenever you've got unemployment claims that are getting lower and lower and lower, that's giving you more demand or power for that particular currency. So that gave us the first bit of indication for our bullish dollar, right? We were expecting unemployment claims to drop from 212 to 205, which is a 7,000 claim drop, and whenever you see those drops in unemployment claims, you get some demand for the currency. But we got variance here, right? This really, really beat expectations. So whenever you get that kind of variance, you can see some significant moves in the market, okay? So we got that right there. I don't really pay much attention to the Philly Fed Manufacturing Index. That's what I consider a micro driver. But one of the things that I pay attention to a lot are building permits, right? Because as building permits increase, that means that we're looking at more houses being built, and that's good for the economy. So building permits, that's one of the very first indicators we pay attention to. The previous was 1.34 million. The forecast was for it to be stagnant at 1.34 million again, but it came out at 1.52 million. So we've got two positive things to make the DXY essentially go up and give some strength to the dollar. And of course, the housing starts, right? The housing starts is right in alignment with building permits, and we've got the same thing here. We had the previous housing starts at 1.32 million. The forecast was for it to be flat, but the actual came out greater than the forecast. And both of these things are they have the effect where the actual being greater than the forecast is good or bullish for the currency. So since we were looking for strength in the United States dollar, and I've been bullish on the dollar anyway, especially with dollar demand and all that good stuff, we can talk about that another time. Since I was looking for strength in the dollar anyway, I saw the dollar strength confirmed here, here, and here. So even with the Philly Fed Manufacturing Index coming out, giving us some quote unquote dollar weakness, when it came to the major market drivers for today were bullish for the dollar. And when it comes to quantity of the four market drivers that would have had an impact on the dollar, three of them were positive for the dollar, with only one being negative. So you just use that as your probability. Stacking that up with your technical analysis, and all of your reasons to enter into a trade from high to weak, low to weak, order block mitigations, blah, 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 all of that good stuff, that gives you reasons to enter into a trade. Now, the things that I believe will accelerate this trade are what's coming up, not tomorrow, tomorrow's Friday with the University of Michigan Consumer Sentiment Report. That can have some impact on the market, but the main thing I'm waiting for is to see what the federal funds rate anticipation is going to be next week. So if we're looking at the federal funds rate going up, then we should see some power in the dollar for the first half of the week. And if the federal funds rate comes out higher than expected when Jerome Powell actually releases the federal funds rate on Wednesday, then that'll definitely give even more power to the dollar. We'll see this thing just fall to the ground, okay? But that's it. That's my thoughts. Please do not take this as a financial advice. I'm not saying go put 18 standard lots on gold in your live account or blow your funded account, anything like that. I'm not a financial advisor. I'm just a professional Forex trader that's funded through a couple different prop firms, got an investor, doing pretty well for myself, living full-time off my Forex profits. But ultimately, I'm just showing you how I think. I'm showing you how I think and how I make trading decisions. Sometimes they go really, really well. Sometimes they go against me. Sometimes I'm completely upside down. Sometimes I catch these super crazy wick entries where people are like, oh my God, you're cheating. How the hell did you catch that move? Either way it goes, trading does involve risk. It's a game of probabilities, and it is a marathon, not a sprint. So please take this as educational information. Please trade wisely, trade with proper risk management, and always exercise patience. In the meantime, between time, keep taking the banks for everything that they got. This is yours truly, Coach MJ Worthmore from LCA University and SuperSimpleForex.com, where we teach Forex traders how to legally rob the banks, because that's where all the money is. Hope you found value in this video. Smash the like button for me, subscribe, comment, do all the YouTube stuff, and I'll see you in the next video. Talk to you guys soon. Peace.